All right. Hey, everybody, and welcome back. We're going to be taking a deep dive into the stock market today, specifically what's going on like right now and maybe where we can find some bright spots, because everybody's talking about the market being down, and we want to look past those headlines and see what the really savvy investors are looking at.
Yeah, it's definitely a time to be choosy, and we've seen the S&P 500 is down significantly, and even those tech giants, the Magnificent Seven, they're down by double digits, and
Wow.
that's impacting trillions of dollars in overall market value that we've seen kind of disappear recently.
Double digits, ouch. So, I guess what does that mean for someone who's like maybe not a daily stock watcher? What does that actually look like in real life?
Well, one indicator is something called the Fear Index, or the VIX, and that's basically a measure of how much uncertainty investors are feeling.
Okay.
And it's been climbing, so that means that people are getting a little more cautious. And to add to that, Goldman Sachs, they're a major player in finance, and they've turned bearish on the economy.
Oh, wow.
And they've even revised their economic forecasts, to reflect a less optimistic view.
So it's like a year ago, everyone was feeling greedy, and now Goldman's like, hold your horses.
Yeah, big shift for sure.
Huge shift. Okay.
Yeah.
So does this like cautious mood, does it affect every part of the market equally?
Not necessarily.
Yeah.
While tech and consumer discretionary sectors have been underperforming, meaning, they're not growing as much as others,
Right.
there are always exceptions. For example, Bank of America is actually quite optimistic about Salesforce. And they believe that Salesforce's focus on AI-driven growth could make them a good long-term investment, even if the overall tech sector, faces some headwinds.
Oh, interesting. AI is like the magic word these days. So let's say you're interested in finding, those potential winners, those companies that are standing out.
Yeah.
What should we be looking for?
Well, we've got 5 companies on our radar today that I think are worth taking a closer look at, even in this volatile market. They all have some unique characteristics that I think suggest, potential for growth.
Okay, so let's start our treasure hunt then. First up is Booking Holdings.
Okay.
And for those who aren't familiar, they're kind of like the travel giant behind platforms like Booking.com, Priceline.
Right.
Basically, if you've booked a vacation online, chances are they're involved.
Exactly. They generate revenue through commissions, service fees, advertising. Over the past year, their stock has done pretty well, up 27%.
Yeah.
However, since the beginning of this year, they're down 9%,
Okay.
likely reflecting the overall market jitters.
So they're not immune to what's going on, but you mentioned their long-term performance is pretty incredible, up
Yeah.
over 2,000% over the past decade. That's way more than the overall market.
It is. One factor driving their success is their ability to consistently improve their margins, their operating margin, which is essentially the profit they make on each dollar of revenue after operating expenses, has increased by 19 points, which is significant. This makes them more profitable, and it gives them, a competitive edge.
Yeah. So they're getting better at making money, which is always a good sign.
Right.
What's Wall Street's take on their future?
Analysts are optimistic. They've set a price target of $563 for their stock, which suggests a potential upside of 26%.
Wow.
This means, they believe the stock could go up by that much.
Okay, so even though the market's shaky, there's still a belief that Booking Holdings has room to grow. From
Yeah.
your perspective, are there any potential risks or hidden opportunities we should be thinking about?
Well, one thing to keep in mind is the increasing competition in the online travel space. New players are constantly popping up, so Booking Holdings needs to stay innovative to, maintain its market dominance.
Right. It's a tough business.
Right.
Great point. All right, let's move on to our next company, ServiceNow. And they're all about making IT operations smoother, right?
That's right. They offer a cloud-based platform that helps organizations automate their IT workflows, which can save them money, make them more efficient. Think of them as, the behind-the-scenes heroes that keep businesses running smoothly.
So not a consumer-facing company, but providing a really essential service. What's their track record like?
Their performance has been mixed up 8% over the past year, but down 21% year to date. Again, likely reflecting, the overall tech sector slump.
Yeah.
But over the past decade, they've delivered a 922% return to investors. So, there's definitely a history of strong growth.
That is a very impressive number. What's the secret sauce behind their success?
One key factor is their subscription-based business model. They generate recurring revenue from their platform, and their customer retention is excellent. They have a 98% subscription renewal rate.
98%.
Basically, almost all their customers stick with them.
That's like the holy grail of subscriptions. So they have happy customers, a history of growth, and they're in the middle of a tech sector that's, Well, going through some things. What are analysts predicting for their future growth?
Well, they're expecting ServiceNow's earnings per share, which is a key measure of profitability.
To grow by 31% over the next 3 to 5 years.
That sounds promising.
Hmm.
But their stock isn't exactly cheap, right?
You're right. Their current valuation is 51.5 times their estimated earnings per share,
Okay.
which is significantly higher than the average for similar companies. So, investors are definitely baking in high growth expectations.
So it's not a steal, but there's a belief that they can keep growing. What's Wall Street's price target?
Analysts have set a target of $1,171,
Wow.
implying a potential upside of 39%.
So despite the higher price, there's still room for potential growth. Are there any red flags or hidden opportunities that you see?
One potential risk is the reliance on large enterprise customers.
Yeah.
If the economy slows down significantly, those big contracts could be at risk.
That's a good point.
Hmm.
Always important to consider the bigger economic picture.
Okay, let's shift gears and head south, literally. Our next company is Mercado Libre, often called the Amazon of Latin America.
It's a very apt comparison. They are a major player in both e-commerce and financial technology, fintech, in that region, operating a marketplace platform similar to Amazon, and also offering financial services through their Mercado Pago platform.
So they're tackling two massive high-growth markets at once. That's ambitious. How have they been performing?
Well, they've actually weathered the recent market volatility quite well.
Interesting.
Over the past year, their stock is up a respectable 30%, and they're even up 21% since the start of this year.
That's really impressive, especially compared to some of the other companies we've talked about. What about their long-term performance?
Over the past decade, Mercado Libre has delivered a phenomenal 1,497% return to investors.
Okay, wow, I'm sensing a theme here. These companies may be facing some headwinds now, but they've got impressive track records of growth.
Exactly. Mercado Libre is benefiting from the rapidly expanding e-commerce and fintech markets in Latin America, a region with, a lot of growth potential. They're in the right place at the right time.
Absolutely. So what's the outlook for their future? What's Wall Street saying?
Analysts are still finalizing their price targets, but the general consensus is that the company has a long runway for growth ahead.
Okay, so there's some uncertainty, but the fundamentals look good. Are there any potential challenges or hidden opportunities that we should be aware of?
One challenge is the complex regulatory landscape in some Latin American countries.
Right.
Navigating those regulations and making sure they're in compliance can be tricky.
Interesting. Regulations can definitely have a big impact on a company's growth. All right, moving on to company number 4. We've got NVIDIA. I feel like everyone's talking about them these days.
Well, they're a true innovator in semiconductors and artificial intelligence.
Right.
Their GPUs are essential for everything from gaming to data centers to, of course, all those AI applications we keep hearing about.
So they're basically powering the AI revolution, and it seems like everyone wants a piece of the action. They're expecting their revenue to jump by 50% in 2024.
That's right. They're dominant in the GPU market and a key player in AI, which is only going to grow in importance.
It is. So they're in a really strong position right now. But are there any potential risks or opportunities that we might be missing?
Well, the semiconductor industry is known for its cyclical nature, meaning demand can go up and down dramatically.
Right.
However, NVIDIA's dominance in key growth areas like AI, helps to mitigate that risk.
So even if there are ups and downs, their focus on AI could help them stay ahead of the curve. Good to know. All right, and last but not least, we come to Microsoft. They're a classic, right?
Yes, Microsoft. They managed to transform themselves, from a software-focused company to a cloud powerhouse with their Azure platform. And they've been making strategic investments in AI as well.
They're definitely not just sitting back and relaxing. Their cloud business is booming, growing at 22% year over year.
Yeah, Azure is a major driver of growth for them. And they're also generating a lot of recurring revenue from their Microsoft 365 subscription service.
Right.
Plus, they've made some smart acquisitions like LinkedIn and GitHub, which have, expanded their reach and made their ecosystem even stronger.
It seems like they have their fingers in a lot of pies, and they're doing well in most of them. What's the overall outlook for their future?
Well, analysts remain optimistic about their long-term growth potential.
Okay.
They have a diversified business model, a strong brand, and they're clearly committed to innovation.
Right.
All of which make them a force to be reckoned with.
So they're still a solid bet, even in a volatile market. Are there any potential risks or hidden opportunities that we haven't considered?
One thing to keep in mind is the increasing regulatory scrutiny of big tech companies, Microsoft, like other giants, could face stricter regulations, which could potentially impact their operations and profitability.
That's definitely something to watch. All right, that wraps up our look at 5 companies with serious growth potential. Before we move on, let's take a moment to recap what we've covered so far.
Sure. We started by taking stock of the current market environment,
Right.
which is characterized by uncertainty and volatility, with factors like the, dropping S&P 500 and Goldman Sachs's bearish outlook
Hmm.
contributing to that feeling.
Right. But we also learned that even within sectors that are struggling, there are companies like Salesforce that are defying the trend.
Absolutely. It's all about finding those individual companies that are poised to outperform regardless of the overall market conditions.
And then we went on our treasure hunt, digging into 5 specific companies, Booking Holdings, ServiceNow, Mercado Libre, NVIDIA, and Microsoft, all of which have compelling growth stories.
Each of these companies operates in a different sector, and they all face unique challenges and opportunities.
Yeah.
But the one thing they all have in common is a history of impressive growth and a positive outlook for the future.
I think it's really encouraging to see that even in a market like this, where there's a lot of fear and uncertainty, there are still companies out there doing great things and innovating.
Absolutely. And that's why it's so important to stay informed, do your research, and look beyond the headlines.
I completely agree. Okay, let's dive into some specific questions about these companies because I'm sure you have some insights that our listener won't find anywhere else. I'm happy to share my perspective. What would you like to know?
Okay, so
Yeah.
out of the 5 companies we've talked about, if you had to pick one that really embodies resilience and innovation, which would it be?
Oh, that's a tough one. They all have their strengths. But if I had to choose, I'd say Microsoft. They've been around for a long time and they've consistently reinvented themselves, adapting to new technologies and trends. Think about it. They were once synonymous with desktop software, and now they're a cloud powerhouse with Azure,
Mm.
and they're deeply invested in AI. That takes vision and a willingness to change.
It's a pretty incredible transformation when you think about it. They were
Right.
almost left behind during the initial rise of the internet,
Yeah.
but they managed to catch up, and now they're a leader. So they've definitely demonstrated they can adapt.
Hmm.
Okay, another question. Which company do you think has the most intriguing growth story, and what makes them stand out?
For me, it's Mercado Libre. What's fascinating is they're not just tapping into one high-growth market, but 2, e-commerce and fintech.
And they're doing it in a region, Latin America, that has enormous potential. They're essentially building an entire ecosystem from the ground up, catering to a rising middle class that's increasingly connected and looking for online solutions.
It's like they've identified a huge opportunity that others might be overlooking. They're not just riding a trend, they're building something new. Now, let's say you're talking to a friend who's just starting to learn about investing. What key insights from this deep dive would you share with them?
That's a great question. First and foremost, I'd emphasize the importance of diversification. Don't put all your eggs in one basket. Spread your investments across different companies, sectors, and even asset classes. This helps reduce your overall risk.
Diversification. It's like the classic investing advice, right? Don't bet everything on one horse.
Exactly. Second, I'd remind them that investing is a long game. Don't get spooked by short-term ups and downs in the market. Focus on companies with solid fundamentals, those that have a track record of strong performance and a clear vision for the future.
So patience is key.
Absolutely. And finally, I'd encourage them to do their research. Don't just follow the hype or rely on headlines.
Right.
Dig deeper into company financials, read analyst reports, and really understand the risks and opportunities associated with each investment.
Knowledge is power, especially when it comes to investing. So we've covered a lot today, from the overall market mood to specific companies with growth potential. What surprised you the most in this deep dive?
Honestly, what struck me is the resilience of certain companies,
Mm.
even when the market throws them a curveball. Companies like Salesforce and Mercado Libre are showing that innovation and a strong strategy can lead to success even when there are external challenges.
It's like they've got this inner strength that helps them navigate through choppy waters.
Okay, one last question for you. What was your biggest takeaway? Which company or trend really piqued your interest and why?
You know what really resonated with me is the idea that you don't have to follow the crowd to find success in the stock market.
Sometimes the most rewarding opportunities are those that require a bit more digging and a willingness to look beyond the obvious.
Right.
For example, Booking Holdings' consistent improvement in margins shows that operational excellence can be a powerful driver of growth.
Yeah.
It's not always about being flashy or being in the hottest sector.
Right.
Sometimes it's about the fundamentals.
That's a great reminder that there's more to investing than just chasing the latest trends. It's about understanding the underlying story of a company and its potential for long-term success.
Exactly. And those stories can be found in all sorts of places, whether it's a tech giant reinventing itself like Microsoft or a company like Mercado Libre tapping into a whole new market.
I love that. It's like there's always a treasure hunt going on in the stock market, and with a bit of research and a curious mind, anyone can participate.
I couldn't agree more.
Well, we've covered a lot of ground today. I hope our listener has a better sense of the stock market landscape and some companies to keep an eye on. But before we wrap things up, I want to leave you with one final question.
Okay, I'm listening.
Thinking back on everything we've discussed, what would you say was the most surprising or unexpected takeaway from this deep dive? What really stood out to you?
Hmm, that is a really good question.
Yeah.
I think for me, the most surprising thing was just how much potential for growth there still is, even in this market.
Yeah.
You know,
Yeah.
like we talked about with Salesforce. I mean, that's a company that's really pushing the boundaries of what's possible with AI.
Mm.
And even though the tech sector as a whole has been kind of struggling lately, they're still finding ways to grow and innovate.
Right. And it's like they're not just betting on one technology either. They're investing in a lot of different areas so that even if one thing doesn't pan out, they've still got other options.
Exactly. And that's what I think makes them so resilient. They're not afraid to take risks and
Mm.
experiment. And even if they fail, they learn from it and move on.
So would you say that's like one of the key takeaways from this deep dive? That even in a volatile market, there are still companies that are worth investing in?
Absolutely. I think the key is to find those companies that have a strong track record of innovation and a clear vision for the future. And that's what we've been trying to do today, this deep dive, to highlight some companies that we think have that potential.
And to give our listener kind of a framework for thinking about these things.
Exactly. Because at the end of the day, investing is all about making informed decisions. And the more information you have, the better equipped you are to make those decisions.
I completely agree. All right, so with that in mind, what would you say was the biggest surprise for you personally during this deep dive? Was there anything that really stood out to you?
You know what really struck me was the story of Mercado Libre. I mean, I knew they were a big player in e-commerce,
Mm.
but I had no idea they were also so deeply involved in fintech.
Yeah, it's like they're creating this whole ecosystem down there in Latin America.
Exactly. And I think that's what makes them so fascinating. They're not just riding a trend, they're building something completely new. And to me, that's incredibly exciting.
It's like they saw an opportunity that no one else was paying attention to, and they just went for it.
And they're doing it incredibly well. I mean, their growth has been phenomenal. And I think they're only going to get bigger and stronger in the years to come.
So what's the one thing you would want our listener to take away from this conversation about Mercado Libre?
I think the biggest takeaway is that there are still huge untapped markets out there. And if you can find a company that's positioned to capitalize on those markets, then you could be looking at some serious returns.
It's like finding a diamond in the rough.
Exactly. And I think Mercado Libre is a perfect example of that. They're a company that a lot of people might not be familiar with, but they have the potential to be a real game changer.
All right, so let's shift gears a bit and talk about something that's probably on a lot of investors' minds right now: risk. We've talked about some companies that we think have a lot of potential, but of course there's always risk involved in any investment. So what are some of the things that investors should be thinking about when it comes to these 5 companies that we've highlighted?
Well, I think one of the biggest risks to keep in mind is just the overall market volatility that we're seeing right now.
Right, it's like a roller coaster out there.
Exactly. I mean, we've seen some pretty big swings in the market lately, and there's no guarantee that that's going to stop anytime soon. So I think it's important for investors to be prepared for that, to have a plan in place in case the market takes a downturn.
So don't panic sell if things start to go south.
Exactly. Stay calm. Stick to your plan and ride it out.
All right, and what about company-specific risks? Are there any red flags that investors should be aware of?
Well, I think each of these companies has its own unique set of risks.
Okay.
For example, Booking Holdings is facing increasing competition in the online travel space, and ServiceNow is heavily reliant on large enterprise customers. So if the economy slows down, that could impact their business.
Right. So it's important to do your research and really understand the specific risks associated with each company before you invest.
Exactly. Don't just blindly follow the hype. Take the time to really understand the business and the industry that they're operating in.
All right, so we've talked about risk. Let's talk about opportunity. What are some of the hidden opportunities that you see in these 5 companies? What are the things that investors might be missing?
Well, I think one of the biggest opportunities that I see is the potential for these companies to benefit from the growth of artificial intelligence. As AI becomes more and more prevalent, I think it's going to create a lot of new opportunities for companies that are positioned to take advantage of it.
And it seems like all five of these companies are doing that in different ways.
Exactly. Microsoft is investing heavily in AI through its Azure cloud platform, and NVIDIA is, of course, the leading provider of GPUs, which are essential for AI applications.
Right. So they're kind of like the picks and shovels of the AI gold rush.
Exactly. And then you have companies like Salesforce and ServiceNow, which are using AI to improve their own products and services. So I think there's a lot of potential for these companies to benefit from the growth of AI in the years to come.
That's really interesting. So it's not just about investing in AI companies directly. It's also about looking for companies that are using AI to improve their own businesses.
Exactly. I think that's going to be a really big trend in the years to come.
Okay, great. Well, we've covered a lot of ground today. But before we wrap up, I want to ask you one final question. If you had to give our listener one piece of advice, one thing that they should keep in mind as they continue their investing journey, what would it be?
That's a tough one. But I think the most important thing is to stay curious. Don't be afraid to ask questions. Do your own research, and don't be afraid to think outside the box, because the best investments are often the ones that no one else is talking about.
I love that. So stay curious, stay informed, and don't be afraid to take a chance.
Exactly. Because that's how you find the real gems.
Yeah,
Yeah, it's like sometimes the best opportunities are hiding in plain sight.
they are. And it's easy to get caught up in like the fear and the negativity, when the market's down.
Oh, for sure.
But like you said, there are always these companies that are doing things differently and they're still finding ways to grow.
It really goes to show you that a solid business model and a good management team can make a huge difference.
Absolutely. And speaking of doing things differently, Mercado Libre really impressed me.
Oh, yeah, they're definitely one to watch.
It's like they saw this huge opportunity in Latin America that everyone else was kind of ignoring, and they just went for it.
And they're not afraid to take risks either, like branching out into fintech. That's a bold move.
It is, but it seems to be paying off for them.
Yeah, they're definitely a company that's not afraid to think outside the box.
And that's what I think makes them so exciting to follow. It's like they're writing their own rules.
Exactly. And I think that's a good lesson for investors too. Don't be afraid to look for companies that are doing things differently.
Absolutely. All right, so before we wrap things up, I want to ask you one last question. What's the one piece of advice you would give to our listener as they continue on their investing journey?
That's a tough one. But I think the most important thing is to just stay informed. You know, keep learning, keep asking questions, and don't be afraid to make mistakes.
Because that's how we learn, right?
Exactly.
Yeah.
No one's perfect and everyone makes mistakes. But the important thing is to learn from those mistakes and keep moving forward.
I love that. So stay curious, stay informed, and don't be afraid to take a chance.
I think that's a great motto for any investor.
I agree. Well, on that note, I think it's time for us to wrap things up.
Okay.
Thank you so much for joining us for this deep dive into the stock market. It's been a pleasure having you here.
It's been my pleasure. Thanks for having me.
And to our listener, we hope you enjoyed this conversation and that you learned something new.
Yeah.
Remember, the stock market can be a bit of a roller coaster, but with a little bit of knowledge and a lot of patience, you can achieve your financial goals.
That's right.
So keep learning, keep investing, and most importantly, stay curious. Until next time, happy investing.
Bye, everyone.